Gold is up over $600 an ounce. Over $600 an ounce since we made that forecast. Just the beginning. Just the beginning. We are on the cusp, as I said, of the worst socioeconomic and geopolitical crisis on earth that we've ever seen. And gold is the number one safe haven. And Bitcoin is now the cryptocurrencies, they've lost their flair. They don't have the flair they used to have. Because if people weren't buying all of these cryptos, gold prices would be more than double what they are.
The precious metals market has experienced a remarkable surge, with gold delivering one of its strongest performances in recent history. Up more than 21% this year, gold continues solidifying its role as a reliable safe haven asset and a potential avenue for meaningful returns. The rally gained momentum following the Federal Reserve's first interest rate cut since 2020, which saw gold rise nearly 3% within a week. This price surge reflects more than just a reaction to a single rate cut. It signals broader market expectations of a shift in monetary policy, with investors anticipating the federal funds rate could fall to around 3% by mid-2025. At the same time, escalating geopolitical tensions, particularly in the Middle East and the ongoing Russia-Ukraine conflict, have fueled gold's appeal as a hedge against uncertainty. BRICS nations and their emerging allies have significantly accelerated their gold accumulation, leaving many Western investors scrambling to keep pace. While Western markets show signs of renewed interest, evidenced by growing ETF inflows in September, some experts argue it may be too late to reclaim dominance in gold reserves. As inflation continues to rise and economic uncertainty looms, the intrinsic value of gold is becoming more apparent, especially as BRICS nations push toward gold-backed transactions, seeking alternatives to the US dollar. Although silver often takes a backseat to gold, it also shows promising potential. Gerald Celente, a renowned trends analyst, predicts that gold's upward trajectory will likely increase silver prices, even though silver's industrial demand may limit immediate growth. With silver currently trading near a multi-year high of $32.96, analysts foresee a potential breakout to $34.35 soon, and some projections suggest it could surge to $45 per ounce within the next year. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Go to one of your top trends for 2024. It came out on January 2nd of this year. What's one of the top trends? A golden year for gold. Gold is up over $600 an ounce. Over $600 an ounce since we made that forecast. Just the beginning. What's very important, what goes up must come down, right? There's always these swings. In gold's rise of over $600 since January, it's gone down like at the worst downtime it hit, we would go down like $100 an ounce. That it has not had a big decline in this long is very important to watch. I started buying gold in the late 1970s. It was $180 or $163 an ounce. And that's when I became a trend forecaster. I write about it in the book Trend Tracking. When the Iranian conflict was breaking out, how they taught us to hate Iran without knowing how the United States overthrew the democratically elected government of Mossadegh in 1953, along with the UK, because he had the nerve to say that oil does not belong to Anglo-Iranian oil, better known today as BP, or Standard Oil, better known today as ExxonMobil. It's the Iranian peoples. And Churchill and the CIA overthrew the government. People have no idea about it. They just taught us to hate the Iranians. And I said to myself, boy, I bet gold and oil prices. And I started playing the futures market. That's when I became a trend forecaster and quit my job. So going back, we are on the cusp, as I said, of the worst socioeconomic and geopolitical crisis on earth that we've ever seen. And gold is the number one safe haven. And Bitcoin is now the cryptocurrencies, they've lost their flair. They don't have the flair they used to have. Because if people weren't buying all of these cryptos, gold prices would be more than double what they are. But what happened, like, for example, when inflation's skyrocketing, like places in Argentina, where it's, like 300%, people aren't buying gold. They're buying tiny bits of cryptos to try to keep their currency from going to zero. that's ending. I'm very bullish on it for a long time, but I believe that now the safe haven money is going into gold. And also, much of the world has had enough of the United States geopolitical and socioeconomic hegemony. So you got the BRICS. We could see in the very near future a currency coming out backed by gold. Gold to me is no question about it. Nothing. And I don't give financial advice. We say this is what's going on. This is the way we see it, and here's our forecast. And that's the way I see it. It's going to be, and then silver is going to be, behind it. But silver is going to go up too.
Gerald Celente warns of mounting economic challenges on multiple fronts, with Germany's fragility at the center of the unfolding global crisis. The downturn in Germany, already the weakest economy among the G7 nations with a 0.3% GDP decline last year, reflects deeper structural problems. Should its output shrink for a second consecutive year, Germany would stand alone in contraction among its peers. Celente notes that the warning signs were already visible in 2019, just before the COVID-19 pandemic. While massive stimulus programs postponed the collapse, they created inflationary pressures and unsustainable debt levels that are now coming to a head. Celente argues that the pandemic response, pumping trillions into markets through corporate bond purchases, negative interest rates, and cheap credit, only provided a temporary reprieve. Now, economies are struggling under inflation, weak demand, and unmanageable debt, signaling the end of the artificial growth cycle. Meanwhile, trade tensions between the U.S. and China continue to intensify, with China retaliating against Western sanctions, adding further strain to global markets. In Celente's view, this growing instability could trigger a financial crisis far worse than the Great Depression. Industries are scaling back, supply chains remain fragile, and banks face risks from unserviceable debt and reduced liquidity. Celente warns that the combination of economic stagnation and geopolitical turbulence sets the stage for a historic collapse that could reshape the financial world in ways few are prepared for.
Again, tracking trends is the understanding of where we are and how we got here to see where we're going. And by the way, these are some of my books. Trend Tracking, far better than Megatrends, Time Magazine. Trends 2000, international bestseller. Been publishing the magazine, the Trends Journal, since 1991. We only put facts down. It's not what you like, what you want, what you wish for. And you got to look at, again, tracking trends is the understanding of where we are and how we got here to see where we're going. Germany, let's go back to 2019, just before the COVID war. Germany was on the cusp of recession. That's right. Look up the data. The COVID war starts. They pumped in countless trillions of dollars, government buying corporate bonds, negative interest rate policy. They artificially propped up the markets. They caused inflation by dumping all this cheap money in and artificially boosted. Now it's going back to reality. So Germany's going back to where it was in 2019 and the rest of the global economy. Germany is the largest, as you well know, economy in the EU and the third largest in the world. China, the second largest. Their economy has gone to crap because of 3 years of zero COVID policy. The reality is hitting. Everything was artificially boosted up, and now the crash is coming. There's no way to inflate this because they're going to be lowering interest rates. That's going to bring inflation up, but that's not going to boost the economy that much because the people are busted. 3/4 of Americans are having trouble meeting their debt level, paying their debt. The interest rates, average interest rates on credit cards in America, nearly 22%. 22% interest when you're late on your payment. Hey, how about the mafia? Hey, whoa, hey. If the Italians were doing that, hey, look what they're doing. Oh, but the banksters could do it. The American people had to pay $14 billion in debt for late payments. Late payments, $14 billion last year because of the high interest. So the whole thing is going down everywhere. You're looking what's going on with Volkswagen, cutting back. You mentioned the trade wars going on. China's retaliating. No, this is the beginning of the end. We are going through the worst geopolitical and socioeconomic crisis in the history of the world, part one and part two, because what no one is talking about, other than the Trends Journal, is the office building bust. You have an office vacancy rate, nobody in there, in the United States in the largest cities of 24%. Vacant. Your office occupancy rate, meaning people going back to the work, 51%. Okay. I own the office building. How am I going to pay my debt, my loan, when I don't have tenants anymore? They're all leaving. They don't need all this space. How are the banks going to cover the losses? Because when they dumped all that cheap money in and people started putting money in the bank, the banks bought treasuries. You bought treasuries when interest rates was zero? They ain't got the dough to cover this. There's going to be an office building bust. It's going to cause the banks to go bust. That's going to be the greatest financial crisis, way worse than the Great Depression. But don't worry. When all else fails, they take you to war. We are on the verge of nuclear annihilation.
Gold is poised to reach new all-time highs in the coming months as economic instability deepens, fueled by geopolitical tensions and a looming recession in Germany. As Europe's largest economy teeters on the brink of contraction for a second consecutive year, its downturn could drag the entire Eurozone into recession, further undermining global markets. Central banks are likely to respond with aggressive rate cuts, pushing investors towards safe haven assets like gold. Please share your thoughts on Gerald Celente's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.